33 to 67.27. This is about 6-point zone over here. So this zone, right, if we zoom all the way back, if we go to our presentation, right, if we zoom all the way back, so our zone, remember this zone over here that we started with, this zone here, this zone you see here flipped from supply to demand, right? It acted as supply and now it's flipped to demand, right? So this zone here is actually being supported by passive buyers because the aggressive sellers have failed, right? So this is where the buy becomes quite an A+ setup. So these aggressive sellers have failed. Also, if you remember earlier, we had passive sellers over here as well, these passive sellers, right? So these passive sellers failed, these aggressive sellers failed. If aggressive sellers fail and passive sellers fail, there's only one other option. It's to look for longs, right? So again, my entry came after I saw aggressive sellers failing and we break above this level. So by breaking above this level, it shows us that the previous passive sellers previously have failed, that these aggressive sellers have failed. So the entry comes when we break above the level. So again, the entry was at 33, stops just above this level at 29. Again, where do you want to put your stop loss, right? I want to put my stop loss here because I know there's a lot of passive buyers over here, right? These sellers have failed, right? These sellers have failed. We also see a lot of zeros down here, finished auctions here, 66 for 0, 47 for 0, 6 for 0, 43 for 0, 5 for 0. Finished auctions, a 0 in this case on the ask side represents finished auction. So it just basically means the reversal higher is more likely. So we're seeing a finished auction, which means buyers and sellers are no longer interested in trading at that price. They think it's a fair price. They're not interested in trading at that price. So that's why you can have your stop loss here at 67.29, 67.28.29, because you can see aggressive sellers failing. So it shows you buyers are in control, and it shows you buyers and sellers aggressively are not interested in trading at those prices. It is a finished auction, and therefore you can put your stop loss there. Your entry should be just above the zone over here. So notice how this candle broke above the zone, or peeped above the zone. It wicked above. Notice how we have aggressive buyers over here, and notice how we break above this zone. So as soon as we see price breaking above this zone, that is going to be your confirmation entry, right? That is your confirmation. So when we go back to the charts now, your entry would be at 33 or 33.4, 33.3, stop loss at 29, 28, 29 area, and you simply want to target the previous week's high, which is this red line up here. This is where you want to be targeting for about a 1 to 4 risk to reward, 1 to 3, 1 to 4 risk to reward, right? So if you got in long here, it was actually a good ride. So yeah, so this is how I didn't catch the entire trade. I think I caught it up to about a 2-hour risk to reward. I think I tapped out here, but this was obviously the scope that you could have targeted, right? So just to sum this video up, right, this is a flip zone. This is what we call flip zone, supply to demand interactive flip zone. So when you're looking at this region, when you're just looking at this from a bird's eye perspective, right? So if we just go back to our presentation here, just to finish off. So this is what I look for in a session, right? So I choose my key levels and I wait for order flow to confirm what's going on at the key level. So basically it was a demand zone because aggressive buyers